The Westpac Melbourne Institute Index of Consumer Sentiment lifted by 0.6% in November to 105.3. That's still very comfortably in that optimistic zone where optimists outnumber pessimists. And it's been holding there for the last few months, despite the fact that a few months ago both Sydney and Melbourne were locked down, and in the last couple of months both Sydney and Melbourne have been reopening. It does really contrast with what we saw last year about this time, when the index actually got to 105 but lifted by 32% over the previous 2 months, once Victoria had reopened and the rest of the country heaved a sigh of relief that they weren't going through the same issues. And I think the reason why the index has held up so well during lockdown has been the confidence that consumers have got in terms of the success of vaccinations. So if we look at the confidence of people who are unvaccinated, it's only 7.3% of the survey, but their confidence levels is down at 73.7, whereas the confidence of people that are fully vaccinated is 106. So what we see here is the vaccination story is the one that's dominating confidence in the survey. Only a 0.6% move. However, I think there's a rich degree of insights into how the economy is evolving out of lockdown in this survey. To begin with, we have a survey with regard to a question that we ask every year about spending intentions for Christmas. So we say, do you intend to spend more or less on gifts for Christmas? And the result there was quite encouraging. In fact, the proportion of people saying spend more relative to the proportions saying spend less was the second highest we've seen since we started to ask the question in 2009. And indeed, the proportion saying less was the lowest proportion that we've seen since 2009. I would describe it as saying that people are determined not to cut back their spending, but by the same token, they're still quite cautious about overextending. And then when we see another question in the survey about is now a time to buy a major household item, that was slightly higher, but it's still down 7.7% relative to a year ago. And I think what that's telling us is that whilst there's more optimism about spending, the huge surge we saw in spending on durables since COVID has meant that there's a degree of saturation in terms of people's purchases of durables. So when we see this boost of spending into the Christmas period, I think there is going to be this rebalancing between durables and goods and services and experiences. So a larger lift in the proportion of services and experiences that will be in that mix. Another big development over the month was developments in financial markets. So over this month, financial markets have moved very quickly to price in multiple interest rate hikes over the course of next year. We saw the Reserve Bank Board's response to that, indeed by dropping their yield curve control policy, and also no longer saying that the first rate hike will be in 2024. I believe this did unnerve people with mortgages, and we saw the confidence of mortgagors down by 5.3%, and their confidence about their financial position over the next 12 months fall by 7.5%. But by far the most important aspect of the survey was the insights we saw for the labour market. A question that we ask every month and that we've been asking since the mid-70s is, how do you feel about the outlook for the unemployment rate? And that survey, this week's survey, showed a lift of 11% in terms of confidence about the labour market. That's the highest level we've seen since the mid-1990s, when the economy was coming out of that deep recession of the early 90s. And for females, it's the best result we've seen since the mid-1970s. So what it's telling us is that confidence in the labour market is at extraordinarily high levels. And when we looked a bit more deeply into which industries are showing the greatest degree of confidence, we saw real estate, hospitality, healthcare and retail being those sectors where the greatest confidence resides. And that, of course, suggests that that's where we're going to see the greatest degree of labour shortages over the next 6 months or so. Another aspect of the survey has always been insights into the housing market. And once again, the survey didn't disappoint this time. Recall the question about is now a good time to buy a dwelling. Up till last month, that was down by 32% from the peak in November 2020. But this month we saw a bounce of 9.1%. And the strength was right across all of the major states with the exception of Queensland. And the way we interpret that question is that when people see affordability really being squeezed, they tend to back off in terms of whether now is a good time to buy a dwelling. So this fear about squeezed affordability seemed to ease somewhat in the month. And I guess that's related to the issues that we talked about before, about the tightening of financial markets, the bringing forward of interest rate hikes, and the expectation that possibly the pace at which house price appreciation has been moving will start to ease. And we saw further confirmation of that when we looked at the index of house price expectations, which we saw fall by 2.7% in the month. And the falls were right across the board with the exception of New South Wales. And that was really because there was a big fall last month and a bit of a statistical bounce this month. So we've got people feeling a little more confident about time to buy, but also expecting that the house price appreciation is about to slow. And that, of course, will be something that will be a really important factor over the course of 2022 and 2023. I think you're aware that Westpac expects that the pace of house price appreciation in 2022 will slow substantially from over 20% to around 8%, and we'll actually see house price falls in 2023. But that's based upon our forecast that the first rate hike won't be until February 2023. If those rate hikes were to be brought forward, as the market is expecting, then that house price profile will flatten out and the timing at which prices start to fall will have to be brought forward. So in conclusion, whilst we've only seen a very modest increase in confidence in the survey, the depth of analysis in terms of spending patterns, the state of the housing market, the state of the labour market, and the issue around family finances provides a lot of very interesting reading for the November Westpac Melbourne Institute Consumer Sentiment Survey. Thank you.